Hello traders, and I missed this big drop in the Dow. This is actually the 20-year Treasury notes, US Treasury notes, and this was for me the main cause of the rout on Friday, because what happens is this is basically showing that the market is pricing in inflation. Inflation means interest rate rises. Interest rate rises puts the squeeze on the economy and spending, and could ultimately further down the line create a recession. But in the meantime, let's just focus on the now rather than the longer term. All we've done is bumped into this long-term trend line. This trend line kicks off in 2011. We get a test of it, or we start to create the trend line on the 30th of December 2013, and here we are in March 17. So all we've done after all this dropping on Friday is just come into the long-term trend line. So for those of you not familiar with bonds, when bonds drop, the yields go up. So basically this is a sign that the market is pricing inflation and expects interest rate rises to continue higher. So that's why people are dumping bonds, because they're going into assets that can protect them from inflation. Okay, so that's the data on Friday. Non-farm payroll was very strong. That's one of the reasons why the market is pricing in anything from 1 to 3 more rate rises in the coming 6 to 12 months. Right, so what does that mean for the rest of the market? Well, for the Dow, obviously we've had a big shunt to the downside. We've not even tested the 50-day moving average. That moving average just underneath there is the 50-day moving average. That is the mother of all the moving averages, the real sort of guideline, the guide rope. So we haven't even bothered to test that yet. So on this daily chart, it's showing a resistance area of 860. The pullback at the moment is probably going to be around about the 750 mark. If we can get that high, and then we're going to do at least a minimum of a proper full test of that 50-day moving average, and a full 50% move going back there. Let me just show you where the January start was, because I think that is potentially a big magnet. So the January start was down here at 24,700 roughly. So I think that is going to be the target. So let me put that on the map. If we do continue lower, that is, I think we could come and see somewhere around that 25,000 area. So the pullback is going to be crucial. Alright, so I think what we will see is some fear and trepidation coming in short term. And then once we come down to these levels and potentially hold, I think we'll start to push back up to the highs. So I'm not seeing this as a major sell-off. I'm seeing this as a necessary correction. Share prices were getting very steep, astronomical in some cases. It's just a terrific shame and annoyance that I didn't pick up on the way in which the market could potentially leg down after that great non-farm payroll on Friday. So why could I justify my buying of the DAX? Just about. And if you just go through that, and let's have a look. If you look, what I was looking at was the reaction to the data on the DAX, and the reaction was here. So that was the range that we had on the DAX. When I first got in this, I got stopped out quickly, so I actually would jump back in again when it dipped, because that's how strongly I felt about the conviction. That's the conviction I had for this to push higher. So we eventually went from a low of 810 area roughly to 886. Not great, I hear you say. So I took off half at resistance, bought another half back, and started to scale my stop up and got stopped out as this started to roll over. So I still made money in against the market. That's the crucial thing. Is trade management. If you do get it wrong, can you still make money? Yes. What I should have done, of course, is once I started to get stopped out, because even at the open of the Dow, I was buying the open range floor. So the whole point of scalping and being in the markets on that sort of using smaller time frames is to watch out for when you're wrong and then flip it. So we came down support at 5 o'clock, pushed higher into resistance at 5:30, and then we started to get these waves down, and eventually we finished under 500. Okay, so like I said, I will give you some files and some support on how that you and I can find those better dips, those breakdowns, and I'll go through that on Monday. In the meantime, let's get through some other data. So DAX pullback area I think is roughly 966. No, not as high as that. 785 makes sense. 800, and then see if we can at least come down to 500 on this one. Now, see, when we tested the 200-day moving average on this, we've not even tested the 50-day moving average on the Dow, but the DAX breached the 200-day moving average. So this is the weaker, by far the weaker of the indices, and that's another reason why I'm looking to buy this, to see if we could bounce off that 200. So, like I said, early part of the week, I think we'll potentially see some further selling, and then we need to pick our spot for the action in the second half of the week, which is why I'll be looking in great detail at the markets for Traders Roundtable. Okay, quickly what I'm seeing is I'm seeing a sell signal in the pound US. So that to me is a potential short at 180. Now that's not a lot of data next week overall, although Monday's quite busy for European and pound data. We have UK rates on Thursday, so if nobody's expecting a rate rise in the UK, but the one thing that will definitely have an impact on the market is whether there's any shift towards a rate rise in the voting. If more of the members of the Monetary Policy Committee vote for a rate rise, that could have a big influence on the upside of the pound. But nobody is pricing in any change at the moment. Nobody's expecting any change, I should say. So let's see if we end up selling on a pullback to the 180 area and then potentially coming down to 880 on this pound US dollar, at which point if that holds then we could start making our way to 145 on the pound yen. We've rejected this trend line, so I'd have to say this is definitely at least a pullback in the first half of the week at least. So 575 is a potential pullback for a move down to 260 and possibly all the way down to 150 or lower. Okay, it's a sell signal, it's a rejection, it's a three-way reversal pattern. It's not confirmed until we close under 500. Not confirmed for a real trendline reversal and a significant drop. If you look at the weekly, that's a very strong weekly chart with just the wrong side of the 200-day moving average at this stage. That's why that area is red. Okay, Euro Yen. Last not least, for this particular video, look how strong that Euro Yen is. This is real relative strength. On a 600 pip drop in the Dow, this held up. That is to me, very significant, real relative strength. I would love to see 500 again. It's only 220 drop from this. So if we can just come back and come in and connect to that moving average, then I will be all over it. So I don't think we're going to see any further pushes higher. I'm hoping, I'm wanting a pullback to as good as 630, 600, 630. It's possible. If we get to 750 and keep going, we can just break up, and who knows, maybe even find 140 fairly quickly. But under the circumstances, I'm crossing my fingers for a decent pullback to the 630 area, at least, if not lower. Alright, so I'm very, very interested in the euro yen, and that is going to be a big favourite of mine, particularly for discussion on Monday. So make absolutely sure you're tuned for Traders Roundtable. Plenty of time for questions. I'll be doing a decent analysis of all the key trend lines and price levels, and working harder to try and get you more points. All right, thanks for listening, and look forward to seeing you on Monday Traders Roundtable. Bye for now.